Welcome back. Now we, of course, live here from the Johannesburg Stock Exchange as we unpack the market movement and see how things are faring from the Johannesburg Stock Exchange and beyond. It's a good afternoon to you. My name is Arabile Kumete. So let's continue to check in on how things have fared, particularly out in Asia this morning. A bright start, particularly out in Japan, as the Nikkei moved up nearly 2% there to its best level since March earlier today. And so that picture seemingly doing a whole lot better. The Nikkei itself did move up 2.5% throughout trade today. By the close of trade, that is more than 1% gain for both the Shanghai Composite and the Hang Seng as well earlier today. Yesterday was a slight tinge of negativity out with the Dow Jones Industrial in the United States, unfortunately. So not necessarily a good news when one considers as well that the UK and the US were closed for a public holiday. So no real activity out when it comes to those markets. The FTSE 100 in London today, though, is a little bit up there, 1.2%. On the local front, the JSE All Share is around 1% better off today, so a good start, back above that 50,000 point mark then perhaps, and getting a sense of positivity as well. While the banks are big gainers there, 2.5%, the financials 2.7% up. Unfortunately, the gold indices going down nearly 2%, unfortunately, thus far. It's 17 Rand and 40 cents for a US dollar, so a much better Rand picture when one takes a look at how things are faring there. 1.4%, 1.3% better off than for the local currency against the US dollar, and even a better picture as well across the board when it comes to the euro and the British pound as well. 19 Rand and 6 cents for a euro, and it's 21 Rand 42 cents for a British pound. Over into your commodities picture. Also, the Brent crude price continues to climb, now $36.12 a barrel, nearly 2% higher this afternoon as well. And that trade, $8.32 for platinum, with gold sitting at $1,724 a fine ounce. Let's chat on over to Sean Morrison then from IG South Africa, who gives us a sense of this market picture. So Sean, a sense of positivity then, but is it sustainable?
Really, it really depends on. If you look at what's been happening, the market is struggling to follow through with any gains. So we have a little bit of an up day, then we have a little bit of a down day, and that ebb and flow generally seems to be taking its guidance from, the outlook of COVID-19, the state of where we are with treatments and vaccines relative to COVID-19, and then of course, how that relates to economies which are looking to, reopen around the world. There is a little bit of euphoria now because we are nearing the reopening of a lot of major economies around the world, namely in the US, Europe, and in Asia.
So when one takes a look at those market pictures, one can then try to take them back home, and we see a general upward trend. I suppose the question just becomes, as we begin to open those economies, the rebound effects of any potential second or rebound effects from COVID-19 could certainly impact the market. Could that be worse off than the initial downfall we saw in this market picture?
Look, I think we still haven't even seen the damage that the current pandemic has done to the economy. Today, it's great to see, especially SA Inc., locally listed, local businesses, the local banks and industrial counters doing very, very well. But we know they're still under a huge amount of stress. I think that the COVID is I think this disruption is still here to stay for the next 3 or 4 months or so. And it's really about taking stock and seeing which companies can sustain themselves through this, strong balance sheets.
Yeah, talking about companies with strong balance sheets, Famous Brand seems to be doing well. A 32% increase in headline earnings per share, operating profit to 912 million rand. They're seemingly one of the very few fast-moving consumer goods who, in the full-year basis, are still enjoying some sense of positivity. Is COVID-19 about to impact them perhaps in the new financial year?
I think that's exactly it. Yeah, it seemed like quite a robust set of results, and you can tell by the the market reaction today. Share price last I checked was up, I think, nearly 5%. So positive reaction to the results, but the challenge is, like you correctly said, it's the first quarter of the new year they've guided to be problematic, and we know why. They just basically haven't been able to operate, and it's not just South Africa. It's in the UK, and it's across their sort of global operations, UK, Ireland, Middle East and South Africa. The strength of them, of the company is that they do have leading franchise brands, especially in the fast food side, Wimpy, Steers, Debonairs, companies like that. But, going forward, we'll have to see which of the, how many franchises actually can't make it through. So they might see their footprint start to contract a little bit. We know that, that we've still got the problem of the gourmet Burger King in the UK, also still a drag on earnings, but they've been very strict on that. They're not providing any more financial support there either. So it's really just tightening the belt. No dividends coming up, and just managing this stall. But the previous year, good set of results.
What about Sasol? I mean, we'll talk about it as well after the break, but certainly the circumspect nature of perhaps the Central Energy Fund saying, look, they want to buy some petrol stations, according to a newspaper that is anyway, with regards to Sasol. Does Sasol still have the most enticing assets? Is it still a business that you can look at and say there will be growth for the future as opposed to just for now?
Well, I don't think it could get much worse for them after the bad run that they've had. Sasol, unfortunately, still is linked to commodity cycles, so the future remains uncertainty. I mean, it's really, how much certainty can we predict what's going to happen with the oil price going forward? How much certainty can we predict what's going to happen with the rand going forward? I think, case in point, at the moment, they have a large amount of debt. They need to pay down that debt, and they are making plans to do so. So the petrol station assets, the Central Energy Fund wants to, is going to give them an attractive offer or a decent offer. I would say take it. We've got a rights issue that's going to be voted on shortly, raise some more funds. And I think that's really just about improving cash flow, reducing that amount of debt in the short term, and then we can reassess Sasol relative to where we are sitting within the commodity cycle.
Yeah. All right. Well, Sean, appreciate the time. Thank you so much for it. We'll chat to you again soon as well as we get to unpack that market picture. Sean Morrison is from IG South Africa. We do come back with more on that Sasol story, and we'll chat to you right after this just about more business news making headlines.